you know, volume imbalances, the space between candles. You get this obviously now we know this as an order block. You get like proportion block basically because this is like the start. Then we get an impulsive move and then we get a redelivery. So this movement away from this is the proportion block. Then we get strict buying, right? Now, inside this level is where we have the volume imbalances, like two of these levels. So this price action is what I was comparing with the what time frame was that? Was it a 3 month? Was it a 3 month? Yes. So we have this volume imbalance here on the 3 months too. Like these things are like they're like footprints in price. Okay. Long term
Yeah.
we have like that buyers for higher prices on DXY. But we have that. Not doesn't mean that we're trying to force it. But on US 100 Nasdaq now, we're seeing a potential, draw on liquidity. Like if you know DXY is going to be bullish for the next couple of months or quarters, where is a PDRA on foreign currencies like Nasdaq, the indexes, market, GU? What key levels are drawn liquidity that can act as, a draw too? Because if DXY is bullish, obviously you want other assets to be what? Bearish. So on the monthly, this is what we have. We have like equal low somewhere here. We know that the volume imbalance is here on the 3 months. We know this is the order block. We're seeing a high that got purged. So we see buy side liquidity run, right? So buy side,
Yes.
like this is the whole start of it. We have this high comes in at 20,651.9, and this low comes in at 20,724.3. You can look at this level. So let me take it. Just look at this level, the H level and the L level. So so I'm going to put my cursor on this candle. This candle, the high is what? 20,651.9, right? And the low of this candle is
Yes.
20,724. So there is a tiny fair value gap there, right? There's a tiny fair value gap there
Mm.
that people can either push price higher or completely, fail, which means it can be an inversion in the previous, coming month. If this fair value gap doesn't hold price, then obviously it's going to what start filling, and then we begin to see the low of November last year, October, basically the last quarter, and then the lows
Yes.
is equal low. So we're seeing like what we can see here basically is something like what we can refer to as like a market maker sell model that is starting. Do you get like the beginning stage of a maker sell model?
Mhm.
We're having like original consolidation that happened there in lower time reduces, reaccumulation, smart money reversal here, low risk sell could be going on somewhere here. And that's why on our daily, this the type of setups you might catch. And that's why in our discussion where we're talking about like, anticipating some quarters to not distribute as much, like you could because you know that the first quarter can basically like beginning in January can basically like be a whole accumulating, the year just starting and things like that. You may not really be willing to see buys off this fair value gap. It can completely fail, things like that. Or, you just keep your expectations very, very low. So, there's a monthly key level here. Price has, the low of this candle is 20,724, and the low of this present month is 7,000, 20,704. So we've traded into that fair value gap. But are we going to really see buys of this fair value gap? And do we actually want to see buys of this fair value gap?
No.
When it's high probability for DXY to be what? Bullish. So if we want DXY to be bullish, we want to see Nasdaq bearish. So every bullish PDRA, we don't really want to count it as something that might hold. See how we are using
Mm.
every single thing to weigh our ideas. Do you know that the volume imbalance exists on the 3 months, right? And we've come to the monthly, we've seen that just by that volume imbalance is a very big like order block, and we have like equal lows just beneath it. Like, these things are draws on liquidity. On our weekly time frame, what are we seeing on our weekly time frame? We're seeing that, oh, that volume imbalance here, this is actually it. So it's a level rather than seeing it as something that, is this level, you have to like completely pin it to a particular level. It's an area. Do you get? So this area between this line,
Yeah.
18,353, and this line, 18,242, there is a volume imbalance, which means there has not been complete bodily closure at that level. So long term, below these lows and look at all these swing lows. We have a swing low here. This is the one you were referring to, my guy. This low,
Those ones are the equal loads I was referring to.
yeah, this one,
Yes.
yeah. Then we have this swing low here. We have this swing low here.
Yes.
We have this fair value gap here. Then we have this big order block that, if half of this, basically, if you avoid the open, right, the open to the close of this candle, half of it, basically, if it starts to fail, we know that we are going below lows. So once we start to get to this level, we're delivering into that volume imbalance. So you see how we can trade a long-term plan. Obviously, in the next couple of months, we'll see the answers to this, but there will be a record of this video. That's the beautiful thing about it. There'll be
Yeah.
this video that can, you can watch later and be like, oh, this was what we talked about then. Oh, this is how it is now. And then it adds to your experience. So just now that we had this high, we traded into buy side. We came down, obviously, it was not so much. We acted as proportion blocks, and then we started to see higher prices forming volume imbalances. Now, this volume imbalance, just like we have here, is a level that you could have anticipated lower prices. Why? Because DXY was what? Bullish. So if you're anticipating lower prices when DXY is bullish, that's high probability setups. And you know for a fact that there are volume imbalances that even though you got a delivery of a weak price action, just a delivery, you basically fill the fair value gap up, down to premium, right? Since you got that,
Mm.
there's still probability that the bodies have to completely close below that level to make that level, completely balanced with volume. Now that we've had this, I can start to seek lower prices. Next week, I'm anticipating a low to this. Beginning from Monday, I'm anticipating any setup that can lead me to below these lows. As long as this half of this proportion block candle, where the mean threshold of it, 50% of it, fails to
Mm.
push price higher, anything below that setup, see, can you see we're at like 50% of it and we're still above it? And
Yes.
see, there's still like a remaining part of that volume imbalance that still has to be filled. Like, it's still tiny, like still remaining to be filled with the bodies of the candles. I want to see complete closure. That will make it really, really, delivered. So this proportion block, trading below it, we have sell side. That level will be my, target for the week, my weekly target. And I mustn't get trades leading to there, but everything must be in that direction to stay, in favor of high probability setups. Do you get? So now what have
Mm.
we done? We've taken our buy side, we've formed a low where a volume imbalance is, and for the first time since taking our buy side and forming a swing high, 3 weeks later, what do we get? A shift below that low, a shift below a low that was formed since taking out this long-term liquidity of 2024. This is the first time we ever trade below a low. That's a market structure shift for me. Now that we've had that, where will be my long-term draw? Like I said, sell side
Those-
liquidity. So knowing that sell side is there, can just put like a horizontal array. So to depict it, 20,407.2, right? 20,407.3. Is it? Check the 20,289.6 rather. So knowing that on my daily time frame, what am I going to be looking for? Daily premium arrays that can send me lower, right?
Yes.
Daily premium arrays that can send me lower. You remember that call we had during the week where we were talking about how this fair value gap was what was going to push us lower, right?
Yeah.
Look at how it held like nicely. Bodies of the candles failing to, push above there. We only had wicks, which is damages. And one thing I'm going to write for this call is, wicks, wicks do the
Damages.
damage. Yeah, wicks do the damage. And bodies tell the story. Internalize price like that every single time. Like, just try. Because once you know that, okay, this fair value gap is present here, our weekly perspective is for lower prices. This was why I was holding lower prices since on Monday, because I expected that to form. And because I expected a weekly bearishness because of the weekly volume imbalances at this level, and seeing that all we've had was just weeks into this, we've not had like a bodily close, bro. I am going to be timing that. And look at this volume imbalance we formed here. Look at how we use the bodies of the candles to close below that. Immediately we close below that. Any return to premium will what be
Premium, yes. Any return to premium is a
any
sell.
return. God bless you, will be a sell. And there'll be old lows here. So any area for old lows will be sells.
Yes.
I think we're seeing on the weekly where we're having like equal lows, even on the monthly where we're having like equal lows, we're seeing the same phenomenon right at the daily time frame, equal lows. So we had that delivery, even though we formed a fair value gap. This one was a breakaway gap, basically. We just started to see lower prices below this low, and eventually this. So hoping next week, if we rally towards these highs, trade into this order block, I'm still going to be looking for lower prices because we have, look at these lows, lots of fine clean lows at this level. And I'm willing to be a participant if it's showing its willingness to go lower. So below this order block, a short-term draw, even below where we now have our weekly target. So this is how I'd love to internalize it. One thing I want us to take out from this video is the fact that weeks do the damages and the bodies tell the story. You know, this would guide your thoughts in every single thing. Like the moment you know that, oh, weeks, yeah, they're the damage. The bodies, yeah, they tell the story. Look at
Mm.
here, for instance, this weeks, just the damage, the body is telling the story. That means here is imbalance on bodies of candles, right? So every time we're trading up and there's a key level that can send price down, we're the highest we've ever been, and everybody's excited about the indices. And for the first time in a while, 18th of December 2024, we had this displacement down from the fair value gap. We have a breaker here. Any return into that level, because they have volume imbalances telling you a story on your discounts, you can use these levels as discount arrays where we act as your draw on liquidity for looking for lower prices. So
Yes.
when you see a price action like this that it still didn't get to the low, what it's doing is engineering stops. So when you can anticipate a level that there's an engineered stop at such level, yeah, you are going to
Mm.
hit that area as a puzzle because you know that any return to any premium array, aka fair value gap, you're going to look for lower prices because there's a what volume imbalance on the discount. There's a what sell side on the discount. There's also what equal lows on the discount. So everything leading you forward,
Mm.
shorts. Everything leading into shorts. Every single thing. So yeah, that's the takeaway I want us to have from this video. And then for next week for DXY, let's go to the monthly chart. The monthly chart, we're basically trading in the upper half of what this CB, this this CB on this particular candle. The sell side imbalance, buy side inefficiency. So because it's inefficient on buy side, we will trust that every single delivery should be for higher prices, right?
Yes.
Now that we're trading above it, I'm seeing this thing as bullish because, to where the high of 2022 candle, November 2022,
Mm.
yeah, the high of that candle will be my draw. But my weekly time frame, what do we have? What can I weigh that idea with? I can say, okay, there was a weekly fair value gap here. Obviously, you can see we are trading above it. But what is like a discount array here that is a level that we don't want to see price get below if we're still bullish. As long as price is staying at this area, yeah. Let me first.
Mm.
As long as price is staying above this inefficiency, I'm going to trust. Can you see? Presently, we're above the 50% level, so we're above mean trade consequent encroachment. As long as price
Yes.
stays above that, I'm trusting that we'll see higher prices to where the higher of that candle. And can you see here again? What's that? What's that, my bro? Can you see this?
Okay, volume imbalance.
God bless you. Volume imbalance. So you see how that volume imbalance, I marked it out and it's my draw. I didn't mark it here. I marked it before, right? But see how I'm using it in real time. That's a draw on liquidity, even before we get to the high of 2022, November,
Yeah.
right? So I have that level marked there. And as long as we're trading above this weekly CB, because we're inefficient on buy side. So buy side delivery is what this thing should be trying to offer, right? Look at it
Mm.
into the discount reaccumulation, right? So we're in the distribution phase, baby. As long as we're distributing higher, that will be my draw. And once we get there, I will now know if we're going to get here. Obviously, the bodies of the candles is what I want to see close above this level to be completely what balanced. Giving
Balance. Mm.
so knowing that on my daily, what do I want to see? Let's refine that weekly fair value gap on our weekly time frame to the daily time frame. Let's do that. It's not hard. That weekly fair value gap. This is it on the daily time frame. And above this daily fair value gap, what did I mark there? The daily high, right? And do you remember that
Mm.
weekly volume imbalance? Just below
Mm.
it, we have a daily fair value gap, right? I'm not going to mark
Mm.
out, but we know we have buy side above this place, which is above We have the fair value gap, we have buy side, we have the small daily fair value gap, and then we have what? The volume imbalance on the weekly. Let's go to present time frame, present price action. So we have the daily fair value gap, right? We have the daily buy side, isn't it? And we
Yes.
have one daily fair value gap at this area before we now get to the weekly volume imbalance.
Volume imbalance, yeah.
You see how we've separated the price action. So anything this week that can lead us to higher prices this week. Let's break down this present price action. I'm going to see a movement above this high. I'm not going to see it as liquidity rate. I'm going to see it as a market structure shift.
Yeah, because the candle closed above that high.
Yes, and that can even be a market structure break. Anyone, market structure shift, market structure break. Some traders will like to argue about which one is which. So, yeah, once the body of the candles close above the highs, I like to see that as market structure break. But in the grand scheme of things, it's still a shift because if it's going to continue pushing higher, that's just a shift in my perspective of, oh, yeah, we're still likely to see higher prices. A shift or a break doesn't necessarily mean prices cannot retrace. The
Hmm?
volume imbalance.
Volume imbalance.
Good. So we're seeing that same phenomenon again on the lower time frame. So we have volume imbalance and then we have what? A fair value gap at this level. And because we look by the left, a fair value gap, I'm not expecting price to even come down far to this level, whatever. But my point is a retracement that will allow can be as far as dipping down into this. And anybody will be saying that retracement as a liquidity rate. But I'm saying it as a retracement to buy to continue my bullishness, right?
Yeah, maybe we think that's liquidity rate.
Exactly. So I'm not going to see it as a liquidity rate. And this is what took me time in my journey, like understanding the ones I can trust. Yo, the answer is simple. You have to develop a long-term time frame when you are doing your analysis. So your monthly, you already know like where price is going on the month. Like basically a top-down analysis is what you must be willing to participate in. And as long as you're not willing to participate in that, you'll be all over the place. Always all over the place. So any retracement this week that we're entering into, any retracement down to this level, I'm targeting higher prices. A bodily close, feeling this volume imbalance, telling me that we've not had a bodily close at that level, or trading potentially into this fair value gap, which can be like a balance price range, because by the left side, we also have like a fair value gap. So I'm not expecting price
Mm.
to return there, or if price returns into this level, I really want it to hold because this, right? Look at this, just zoom out. This like is another block, and this is like what a proportional block because it came off of this,
Yeah.
right? So any return to this level, I want to see price push high. If it doesn't, then none of this is high probability. Like it's telling me to change my perspective. So this week, I really want to see higher prices on DXY. If we get a return, filling these volume imbalances, which I would really anticipate because this week we have like CPI, we have CPI going into this
Yeah,
week.
to have CPI on Tuesday.
Exactly. So we have CPI on Wednesday actually. We have normally we usually have the CPI before the PPI, but this is one of the very few times when we have PPI before CPI. Yeah, that's
Okay.
pretty much it. So PPI on Tuesday,
Okay. Wow.
impact. We have a high impact on dollar on Tuesday, Wednesday, and Thursday on dollar. So Tuesday, Wednesday, Thursday, anticipating big moves on this day. So Tuesday we have PPI. On Monday we have like a retracement into this volume imbalance, and nobody might know why it's going there, but you know why it's going there now because you're aware of the volume imbalances. You also know there's another volume imbalance here,
Uh,
right? Like see a lot of volume imbalance. Just don't want to
yeah.
make the charts really messy. I don't like that. I like to fix one level then the next. So volume imbalances, we have fair value gap, aka BC, buy side imbalance, sell side inefficiency. Is inefficient on sell side. So there's a reason for price to even come down. Once that inefficiency on sell side is achieved, it makes this level a good level where to continue to remember what the algorithm is, basically saying like, are we back to bullish prices? Can we trust bullish prices from
Remember the order flow.
yeah, remember the order flow exactly. So this is how I would internalize this week and you know, I'm just going to be very very, very picky on my setups. This is how you also learn how to pick setups. Like you plan for the week, you plan, your gameplay, you plan what you're going to do. Monday, I wouldn't really be anticipating a lot, you get, in terms of like entries, yeah. But from Tuesday, New York session, I'm all over that place. And, these volume imbalances are definitely a good way to
It's
start.
Tuesday, New York.
Yeah. So back to NASDAQ.
Yeah, true.
Prices on NASDAQ below this low, and weeks to the damage. The bodies tell the story. So yeah, Please, if you didn't pick anything from this call or this class, and for the guys watching on YouTube, you didn't pick anything, pick weeks, do the damage, bodies, tell the story. Thank you very much.